Most natural gas forecasts have been horribly wrong. In this video, I'll take you through both the current technical and fundamental analyses for nat gas prices for both the bullish and bearish scenarios so you can make up your own mind. I'll also explain why I think recent forecasts have been so fatally flawed. Welcome to Investor Watch, where we break down top investors' portfolios and provide important market lessons and recaps for investors. Hit the subscribe button to get a constant stream of stock picks and industry analysis videos like this one. Natural gas is known to traders as the widow maker for its extreme price moves and volatility, which is saying a lot as most commodities move with extreme fluctuations. Overall, natural gas prices have plummeted since August of 2022. The spot price is on pace for its worst quarter since 1990, which is a crazy 33 years. For March alone, it is down 21%, and since August, it's down 78.94%. This long-term trend is caused by warmer weather across the globe, particularly in Europe this past winter, as well as an increase in European and U.S. reserves. As soon as sanctions on Russia went into effect, Europe and the U.S. began filling up their strategic reserves of natural gas in anticipation of the winter and a potential shortage on the supply side due to Russian natural gas not being allowed into these countries. In the short term, this last strong move down was caused by margin calls of long positions. Yesterday, nat gas had a retracement that is making technical traders hopeful that this is the bottom. I think it's more likely bouncing off the support zone here and is because short sellers are taking their profits, which often happens at the end of the day. The price is bouncing off $2 at the moment, which it only hits this low of a price on average once every 5 to 10 years. Look at the weekly price. You can see the other times the price has moved below $2, it did not quickly turn around and go back up. Most of the time, it stayed in this zone anywhere from 4 to 12 months. That's a long time considering we are just now entering this level. This means even if this is the bottom, you likely have months to get into a good price. Now let's take a quick look at the technicals traders are looking at. I know I said fundamentals will outweigh technicals, but that's just my opinion and I want you to have all the facts. The current downtrend, at the time of making this video, started on March 14. Traders are watching for a sustained move above this line as a bullish signal. This has to happen in the next month because if not, on May 1 the price will be $1.01. I guess that's possible, but that's extreme and I would put it as unlikely. We did get a 4.85% bounce off the support level at $2, but it stopped at $2.10. The next resistance level above that is $2.18. If the price goes above this, you can expect a move to the next resistance level at $2.40. Most forecasts are bullish because for the first time in over a week, the price action looks to be leveling off, which usually results in a retracement to the upside. Seasonality is also in the bulls' favor, as March is one of the worst months for natural gas prices, so April should see at least a slight improvement. However, the trading volume has increased and the direction is still going down, which is a bearish sign. On the downside, the Fibonacci ratios are saying if we break below $1.98, then we're headed down to $1.70. That's all you really need to know about the current technicals of natural gas prices. If you want to trade it, I would recommend only holding it for 2 to 3 days or a week at most. Now on to fundamentals, which very few natural gas forecasters or traders are talking about at all, which is kinda crazy because the fundamentals are so strong on this one. Here are the reasons to be bearish on natural gas. This past winter has been warm. In fact, New York had its warmest February in recorded history. This is bearish because natural gas demand should stay low until the hot summer months when everyone begins running their AC units. Also, macroeconomically, the energy market is forecast to shrink in 2023 and 2024 as the economy continues to slow down. Next, Freeport Nat Gas, a large supplier in Texas, shut down in 2022 and is about to come back online. There are 2 very large deposits of natural gas in America, Marcellus and Utica. If they were their own country, it would be the 3rd biggest natural gas supplier in the world. But there have recently been 3 different pipelines into these areas stop flowing natural gas. Both of these will increase the supply to an already oversupplied market. The annual change in nat gas production by region is way up in the U.S. In fact, U.S. natural gas production increased 4% in 2023 alone. You can see it has been steadily increasing for years now. The U.S. is producing so much nat gas it is about to take the lead in export. How are they producing so much more all of a sudden? Technology is allowing for more gas to be produced from each barrel of oil. The U.S. began exporting LNG in 2016, and this is the first year we're not adding capacity, which is fueling the oversupply. Now what are the nat gas bulls looking at? If we have a hot summer, it will increase demand. The EU just extended its price cap until December 31. It is set at a cap of $60 megawatt per hour. This adds much needed stability to the EU market since the recent price swings have been dramatic. The expectation is this will increase demand. In France, the natural gas workers have been on strike, which looks likely to be extended. This should help lower output. Also, the supply forecast says output growth will expand 2 to 3% a year for the next 5 years, and this is down from 15% a year growth. Then, all over the country pipelines have either not been working properly or they have failed to keep up with demand. In New England, for example, customers use so much natural gas the power plants used oil for 1/3 of their electricity this winter. Crude oil is much more expensive and worse for the environment, and so many CDs issues being resolved this year. And finally, Russian output is down 9.5% in January and February year over year. In 2022, their production was down 12%. This has happened due to the war in Ukraine, and so shows no signs of a chance they are entering back into the market anytime soon. Inventory of natural gas has been lower than expected the last 3 months. This hasn't resulted in a positive price move, but it's a bullish sign. Those are all the technical and fundamental reasons to be both bullish and bearish on nat gas. Can you think of any I've missed? If so, please write them in the comments so we can all benefit. What are analysts forecasting about the future price? The market's equilibrium price is $3 to $4. However, in commodity markets, it can take a long time before we get there, and analyzing the futures market is showing the price won't hit $5 until 2035. That's a really long time, and let's be honest, no one can predict what the market is going to do that far into the future. However, that's still not a good sign for bulls. And lastly, United States LNG has gone international with its increasing exports, which is increasing volatility in the price. U.S. prices are now affected heavily by developments all over the world. This is relatively new, and while good for the industry, can actually make it less attractive as an energy source. So why am I bearish on nat gas right now? Simply because we know supply is increasing and demand is low. Demand may go up, but it may not. Having said that, the most important part may be the economic environment. If we do go into a recession, natural gas prices will continue to have downward pressure. But if the economy begins expanding, then the added manufacturing and production will put upward pressure on natural gas prices. That wraps it up for this video. Thank you for watching. To get more great videos for investors, including what the top hedge funds are investing in, hit the subscribe button now. Seriously, hit that button.